I'm in the top left.
Ladies and gentlemen, thank you all for joining us. Really appreciate you all being here. As you can see, we subbed out Amit for a much better guest.
Yeah, much more handsome Amit.
Yeah,
and smarter too.
Shorter hair for sure.
There's been no news today, unfortunately. So we're just going to be sort of clowning around. No, I had to do it because Amit always does it. There's big news today. So we had to bring the big brains up here, Chris Haggart, to talk about some potential, what this means for SoFi. You know, how big is student loans? Should we be paying attention to this? Is the extra 10,000, a big deal? Is it guided for all of this stuff? But don't worry, Amit will be back. He's just taking a little break. He just had to do something very quickly, so he'll be popping in. I was just joking about the replacement.
You could never replace Amit.
Yeah. First off, let me go around and get some feelings about what actually happened today. The Supreme Court just ruled that Biden is overstepping his powers, and they don't believe that this was in his right, and that this is potentially hurting some states' income. Tevis, what do you think about this? Is this the right thing? Do you think that this benefits SoFi? And do you have potentially any other thoughts?
Yeah, so I'm probably not going to be the most well versed in this. I sort of saw the headlines. I haven't really read the fine print on this. I know there was a couple of Supreme Court rulings that happened in this last session, and I mean, for us, with the context of SoFi, this is definitely the most important one. This is something that we've been expecting for a while, and obviously it's going to be a tailwind for SoFi, not so much from the actual forgiveness perspective, but the fact that repayment starts in August. So obviously that's going to be positive for SoFi, especially because they weren't accounting for that to happen in the beginning of the year when they made their forecast, right? So, I mean,
yeah,
at a high level, just from what we've known for the context, that's where the positives lie, right?
Yeah. Some people said it in the chat. I do believe Amit is just using the bathroom right now, but he said it's important. It's probably for, I don't know, something about VC funding. It just means he's using the bathroom. But okay, Riley, what do you need? What did you think about the Supreme Court ruling today?
I don't know. I mean, we all knew it was going to come to an end sometime. The big question was, we just wanted to know when. SoFi's been student loan agnostic for a long time. I'm actually really interested to hear what Chris has to say.
I was leaving best for last.
Yeah, exactly. So I'll just hand it over to you.
Chris, go ahead.
So I guess, like, general thoughts on forgiveness and not going through and stuff, or I guess
of the ruling. Did you think that this was necessarily the right call? And then maybe you can just instantly go into what you think this means for SoFi.
So I guess, as far as, I mean, my understanding, I'm no constitutional lawyer, right? But it does seem, and I guess the better way to say this is, I think that the opinion of the court was pretty unequivocal. I found this quote. So Justice Roberts, who's the Chief Justice, and it was 6-3, which was more than I think most people thought it would be.
Yeah.
Most people, and Tanner, I think you said that as well, right? You assumed, or we thought it would be 5-4, right, one way or the other. So, but in the actual opinion, he said the secretary, so he's talking about the Secretary of State, and this is a pretty bold way to say this. He says the Secretary's plan has modified the cited provisions only in the same sense that the French Revolution modified the status of the French nobility. It has abolished them and supplanted them with a new regime entirely. So that's really bold language. So there's, I mean, if anybody doesn't know about the French Revolution, right, the nobility all got decapitated, right? So like, this is, he's saying that they went above and beyond what was written, or what the powers that were granted them by Congress, in such a way that he was able, he made the comparison to something like the French Revolution, right? So I think that the point from the justice's perspective, at least this Supreme Court, that this was unconstitutional, like power of the purse resides with Congress, and they overstepped by trying to, give this much in forgiveness and provide that much relief through their powers, right? What it means for SoFi, actually, it's not that much. So, I mean, in terms of the big thing, and we've all said it a bunch of times, right? The big thing was the moratorium ending. And that's what gave us back something like, when I ran the numbers for the article that I wrote, it was something along the lines, somewhere around like 93% of what we'd expect to get back, we'd get back whether or not there was forgiveness. And then, so this is an extra like 7-8% that you'd probably end up getting a boost to originations. But when you're going from like 0 to 90, or 93, that's a much bigger deal than going from 93 to 100. So, I mean, it is good news for SoFi in that, like, it'll boost those originations a little bit, but the bigger thing is the moratorium ending. And then I think even bigger than that. So I think that Biden is going to try to do some sort of forgiveness through the Higher Education Act. I think that his plan was actually to do it through this first, right? And then if this didn't work, then to go through the Higher Education Act, because progressives have been maintaining since the beginning that he should try to utilize that in order to grant forgiveness. But I think he kind of tried to do this first and use the emergency powers that he was granted. And then I actually think that they were probably planning on extending payment moratorium until that went through, right? Like, I think that the plan, if they wouldn't have been, codified into law with the debt ceiling agreement, was that he would have said, okay, well, now debt relief isn't, or for debt forgiveness wasn't here. We're going to pursue it through the Higher Education Act. And in the meantime, we're going to keep pushing back student loan payments, which kind of highlights, I think, also why it was prudent of SoFi to do the lawsuit that they did previously, that now they didn't need to, right? Because Republicans made a compromise with the debt ceiling agreement that started student loan payment back up. So I guess those are my broad general thoughts.
I think also, like, just looking at it, and not to get into the politics of it, but just I can imagine from Biden's perspective, like, he is going to be forced to be on a path of, like, he has no escape route because of how large this forgiveness was to his entire campaign and his entire term, as the, like, his first term. So I can totally see the Democrats trying to push something else of that same vein. And quite frankly, I'm like, they could push for forgiveness again through another means, but that doesn't necessarily mean that there's going to be another moratorium, right? And I don't think that's going to affect SoFi to the same degree, because for us, the main thing was the moratorium, not the forgiveness itself.
Yeah, so I'm curious, because you said 7 to 8%, and I'm sure that's a much more analyzed approach than what Brad Freeman said of around 15%. I think he was more just taking a rough basis of what this extra 10,000, 20,000 might mean. The number that Anthony Noto said, the $200,000 TAM, is it fair to say that now sorry?
$200 billion TAM.
Oh, sorry.
Yeah, you said $200,000. That's pretty small.
Yeah, yeah. Like, get like 2.5, student loans, and that's it. No, so essentially the $200 billion total addressable market, is that 8% higher now? 216 billion roughly. Is that a fair way to think about it? And does that bring us closer to profitability now than maybe what they guided for?
So I think I don't. This is hard to know, because I don't really know what they haven't specified, at least as far as I've heard, what they were guiding for as far as whether or not forgiveness was coming back. But again, I think it's pretty small one way or the other. I mean, the TAM is probably including all of that, because they probably just looked at, this is how much debt is due, right? They probably didn't look at, this is how much this debt is due minus forgiveness if forgiveness goes through. But the TAM really isn't that important, right? Like, it's more about how much we actually get of that TAM, right? People, I don't know, like, total addressable markets are massive, and it's more important to me to kind of look at what you talk about, right? Looking at a SAM is more important to me than a TAM, right? So like, how much you're actually going to get.
Is the TAM 200 billion, or is the 200 billion a SAM? Because, and okay, so we're using acronyms and not.
Yeah, we should define them.
Wouldn't 1.7 trillion be the total addressable market and 200 billion be the serviceable market?
So the 200 billion is what's inside their credit box.
Yeah.
And so I think and so it's what's inside their credit box, and they think it would benefit from from refinancing with SoFi. So you're right, that is the SAM.
Right, but not including FICOs and incomes.
Yeah, so they've stripped out all the FICOs that are below 680, and they've stripped out all of the so all the people that probably wouldn't benefit. So like if you've got like a $10,000 loan and it's 5%. So basically all undergraduate loans are low enough where low enough both in the amount that you have due, right? Like the total principal of your loan, and low enough in your interest rate that it's not going to make any sense to refi with SoFi, right? It's going to be it's going to be graduate loans, and it's going to be other private loans probably are going to be the SAM, right? The bigger addressable market, the ones that SoFi can actually refinance, and it makes sense to do so.
I would love whenever Amit gets back, because I don't have the actual controls to allow you to share your screen. But if you'd be willing to share some of your predictions for what this means for new revenues, adjusted EBITDAs that you wrote on your Substack.
Sure.
But that might be in a couple minutes whenever he gets back with his VC call or whatever he's doing.
I wonder, like, if repayment starts in August, can they even ramp up that fast to have a material impact on their numbers? Like, they could probably start the ramp, right now leading into August and go for a full campaign. But I mean, for us on the pod, I've been saying this for a while. I'm hoping for a Q3 profitability, in which case this really, it would be beneficial for them for Q4, because that's when the numbers would start making some type of small dent. Obviously, this is a 2024 tailwind, but since it's starting back in late August, and after the ramp up time, it's going to be in the fall. I don't see how this is going to be a material impact in their numbers. If not, like, it's going to reflect in Q4, but just a small amount.
So I guess my prediction on it has been that every time that the moratorium was about to expire, there was a little bit of ramp up in student loans, with sort of early returners thinking that this was the final extension. Now, knowing that that is the final extension, that even the grace period that they sort of presented with us today, that's not actually another extension. This is 12 months of still interest accruing loans. It's just not going to go as a hit to your FICO scores. So I don't know. I don't actually think that this is going to be the real ramp whenever I say Q3, but I do think that we might see larger student loans than what, potentially we would see on a normal quarter.
So I'm trying to share. Is it coming through or no?
No, that's why I said we'll need Amit.
We'll need
so
Amit
if you keep
to
it in the
give
backstage,
me permission. Yep.
Yeah. If you keep it in the backstage, you'll throw it up.
I do have a question about this. I understand that, like, SoFi in the short term. What's so funny?
Sorry, Amit just said he's on his way.
Okay. In the short term, the student loan shouldn't be a big deal. But in the long term, like, Chris, like, how big can student loans get for SoFi? Like, I know personal loans are a profit engine right now, but, like, how big could this new business?
He's literally red.
Laughing.
Amit said he's coming, and he didn't spell it correctly. So he's definitely in the bathroom for sure. So
I was actually surprised. So I'd never known that they were 40% of the like that they had a 40% market share previously, and now it's up to 60%, which means that, like, it can't get as big as home loans and personal loans on, like, so if you're at, say, $2 billion, $2.4 billion, and that's 40% of the market share, then if you're at 100%, you're at like $5 billion a quarter, right? Something like that. And you're never going to get to $100 billion. Now, maybe they can expand the credit box. The fact of the matter is, more and more people are taking out student loans, and they're, like, every single year, the amount of student loans that are out there are growing bigger, which I don't know if we want to get into that or not. I think that's the really sad part about all this stuff with student loans, honestly, is that they're not doing anything to actually help the borrowers. Like, it's all this political talk, and we're talking about a moratorium, and we're talking about forgiveness, when at the end of the day, the problem is that, like, we're making universities fat off of 18-year-olds who don't know what they're signing away, right? Like in a lot of cases, right? Not that's obviously generally speaking. But the fact is that universities can raise tuition because students will get loans for it, right? And so the
Guaranteed.
university is just growing bigger and bigger and bigger, and making tons of money off of these student loans. You've got an 18 to 20-year-old who hasn't had, doesn't have the finance background to say, hey, like what you're doing is dumb, or you're going to be exiting college with 6 figures of debt with basically a mortgage payment, for whatever degree it is, and maybe the degree does justify it, but like somebody needs to sit these people down, and like the reform that should be happening is financial education that allows these students to actually make an informed decision about whether or not this loan that they're getting is justified. And I hate that that's not the conversation. Like I think, anyway, that's really neither here nor there. But I guess to go back to the original point, so like the student loans will come back and they'll make a pretty big deal to revenue and to EBITDA and to profits, right? Like that, and those will flow through pretty quickly. But it's not going to be like, you can't get to a $50 billion market cap just on student loans alone, because it's just not that big of a product. Right.
So
it's going to have to be everything else ramping up that gets them to those levels.
I'm curious though on your let's just do a little thought experiment. Okay, so I didn't actually know that they were 40%. I'm assuming you're saying pre-pandemic.
Yeah. So in the same interview, I don't remember if it was Noto or Crystal Point, but they said that back then we were 40% market share. We've grown and now we're at 60% market share. And that part of that is because people have like exited, right? Wells Fargo exited. There was the one company that went bankrupt. I can't remember their
Common
names.
Bond or whatever.
Common Bond. Yeah, that's the one.
Yeah. Okay. So then essentially the market is actually quite small then, considering we were pretty tiny back then, doing a little over 2 billion in originations or something of student loans.
The biggest one was 2.4 billion, right?
Right. A quarter. Yeah. Okay. So do you think with the large brand awareness, especially over the next coming years, that potentially even the idea of refinancing into a private student loan is a product that needs more awareness? That the reason why students haven't taken SoFi up on this idea is that they just didn't even know that it was an option. So what I'm prefacing at is the idea that SoFi Money is now bringing in a ton of new customers at FICO scores around 750. Is that a possibility to potentially make the customers aware of a product that they didn't even know that they were shopping the market for yet?
Like, I think so.
Like SoFi increasing the total addressable market for student loans.
Yeah, if you look at the membership numbers, let me pull those up really quick. I should have them somewhere. Give me a second. So if you look at when the moratorium was started, how many members we had, it'll take me 2 seconds. I've already got. So in first quarter of 2020, we were at 1.08 million members, right? And now we're almost at 6 million members. So now you've got 6 million extra people in basically in like the SoFi ecosystem, right? And so now, and a lot of those people are 750 plus like FICO scores. A lot of them are going to be, well, a good amount of those are probably going to have student loans that they could refinance. And so you should be growing the addressable market, right? If you looked at quarter four originations per member, student loan originations per member, and then just said, okay, we'll get back to that same originations per member number, I think we'd be doing something like, well, I guess it'd be like more than $12 billion in originations every single quarter, right? So that's obviously not going to happen because that's impossible, right? No, not that many people. But like the point is that your membership has grown so much that you will be able to cross-sell those people. And I don't know, like they've talked about there being an initial bump when loans come back. We'll see if that happens. I'm not building it really into any of my models that I've done.
Sure.
But it is possible, and it is something they'd say that right away, like you should have this initial bump and then it should kind of flatten out as we go. So right. Q3, Q4 might be pretty good. And actually, so Amit, if you could share the thing that I was sharing.
Yeah, I guess there's a bunch of people that have been wanting to refinance, but just literally with no financial incentive to.
Yeah.
And so, yeah.
So can you guys see this?
Yep. And if you could like zoom it in practically till the text hits the, yeah. or maybe a little one less.
One less. There we go. It went too far. My mouse is pretty sensitive. Okay, so this is before the pandemic, right? So we were ramping pretty good. This was that $2.4 billion in originations. And then the moratorium started. So this is that same graph that you saw above. The green is the student loans, right? And the green was the student loans up here as well.
Right.
You see that all of a sudden it dropped off a cliff, right? And then this is kind of what you were talking about. So there was a plan to restart payments in first quarter of 2022. And they got this bump. So they've been sitting right around $1 billion in originations ever since the moratorium hit. And then they got this bump up to like $1.4 billion. And that was that bump because people were like, okay, student loans are coming back and rates are probably going to go up. So maybe I should refinance now.
Then
that
was
student loan moratorium
that was before ever a refinance even happened. Like the moratorium never ended. It was people in anticipation of it ending.
Exactly. So people were expecting it to end it was actually January 31st is when payments were supposed to restart. And then in late December, they pushed it again because of, I think it was the Omicron variant or maybe it was Delta. One of the variants, right, popped up and they said, hey, we're going to need to push this longer. And then it dropped off a cliff even more. So the last 4 quarters, it's been at like 1/5 of the originations it was back here. To kind of give people an idea of how much this has dropped off.
Yeah.
And then we can talk through, do we want to talk through revenue and EBITDA right now, or should we save that for later?
I mean, I feel like it's been me and you. So, I mean, I'm ready, but if anyone has any other questions, then.
Well, I guess just one thing. Did anyone know there was another decision before the actual 6-3 decision, or did that all blindside us?
I didn't know there were 2 cases that they were ruling on independently. I thought it was just one. And so I initially saw that they struck the other one down for standing, and I thought, oh, that's it. So for student loan forgiveness is happening. Yeah. And I was also, I'm at work right now. I was doing a night shift. So I've been at home with my family all day. Like I haven't been on Twitter much at all. I haven't been able to read much because I was just helping out. And like one of my sons had his birthday party today and stuff. So I initially saw that, and then I came back like 25 minutes later and I saw these a bunch of headlines that said, forgiveness is canceled. And I was like, I thought that they ruled the other way. So yeah, I was super confused.
And it was unanimous too, because I was on live with Tanner and they're like, the court has unanimously decided. And we were like, it's a 9-0 for student loans good.
Yeah, it didn't make any sense.
Yeah.
So I'm still kind of confused. What are y'all talking about?
There was 2 decisions. One decision was, I believe, the right to even bring up the case, which they unanimously said, no, they're not allowed to, but I'm probably getting that wrong because then the next one was like the state of Missouri or Mississippi, whatever it was, is correct.
So it was Department of Education versus Brown, and then it was Biden versus Nebraska.
And all we needed to care about was Biden versus Nebraska, to be honest.
So the second we saw Department of Education, which came out 5 minutes before the other, we were starting to rifle through the paperwork, and
SoFi got halted because it dropped like a rock, and then it got halted, and then they released the other one, and then anyway,
isn't it so funny?
A bunch of people traded and sold what, millions of dollars?
I think it was a $5 million order or something. Like I read that somewhere. That's like totally like speculation, but I saw somebody say that.
It was still a sell the news event, though.
It was, yeah. It was definitely sell the news.
No, it's funny because we've talked about how even if the thing goes through from Biden, it really has very little impact on SoFi, and still the market was just ready to tank it in case it went the other way, which is just crazy in terms of how the market works.
The truth is it's like just bare bones. This is nothing but good for SoFi. It might be marginally good, but it's good. Like it just adds that much more origination to the pie. There might be a student that might not have wanted a private loan and just had a couple months left that might have $10,000 extra added onto their bill that might go with SoFi if they already have a relationship through SoFi Money or something like this. I think there was a lot of people like Amit that kind of paid off all their bills to around $10,000 or 20 grand or whatever it was to then realize that, oh, okay, these payments do need to go through. And I don't know what the minimum origination volume for SoFi is, but I'm sure they'll do a $10,000 loan. And I'm happy for you to be a customer, Amit.
Yeah, the last 2 years of college, I had stopped asking my parents for any money because I had started a little company, was generating some revenue. So I paid 40 grand in cash for those last 2 years. And I remember sending the $15,000 payment my senior year. I had 25 grand in loans, so I was paying off the 15 grand. And I was like, all right, I'll have 10 grand left. So I paid off the 15 grand in cash, and then COVID happens a month later. And then for the next 3 years, I kind of forgot that there's this 10 grand left. And then as I've been investing in SoFi and just, I was like, oh yeah, there is 10 grand left. So yeah, I got to pay that off.
Do you know what rate? I assume it's an undergrad loan, so it's probably
It's an undergrad and it's
you'll get
federal
through SoFi. So yeah, it's going to be better.
Yeah. No, I'm struggling with, do I just pay the thing off? Because like I have the 10 grand in cash, I can get it over with. But I'm thinking like we're heading into a nice market. Like, can I do decently better in the market versus just throwing off the 10K?
What is your interest rate?
I don't know, bro. I have no
When
idea.
were you going to school?
2020 I graduated.
Is your interest rate lower than 4.3%?
I think so. I think it's 3.7.
Okay, well then I'd stick it in a savings account at SoFi.
That's fair. That's fair.
All right, I can tell you here, share that. There you go. There's this is what the federal student loan interest rates. So if it was 2016, you're somewhere around here. These are undergrad, is this pink. And
wait,
this
2016 is when I started college, correct?
Okay.
So 3.76, that's perfect. Yeah, that's exactly. Yeah.
So somewhere around here, right? So, and this highlights why it is that SoFi didn't really care about forgiveness, right? Because so SoFi's average student loan is 70 grand, right? Their refi is 70 grand. So if you're an undergraduate who owes 10, 20, $30,000, or even an undergraduate who owes six figures, if your rate is down in these 3, 4, 5% range, you're not going to refi at the 7% ish levels that we're at today. But if you're a graduate student or graduate plus, so the way that this works is it's written right here. So as a graduate student, you can qualify for $20,000 a year at this lower interest level. And then if you want more student loans, which they'll give you as much as you want, then you're at these higher interest rate levels. And so those are the people that SoFi is really focusing on.
Chris, do you have a master's degree?
I do.
So did you pay off all your student loans or not?
I never took any student loans. So I worked my way through college, and then I had scholarships for my undergraduate. And then engineers are so in demand. So I'm a chemical engineer, in case anybody watching doesn't know. So the thing is that you can earn so much straight out of college as a chemical engineer that they have to incentivize you to go to graduate school. And so they gave me they paid for part of the tuition, and then they also gave me a monthly stipend, right? So it wasn't enough to really live on, but it was enough so that I didn't have to go into debt.
An undergrad, you had a full ride for those 4 years?
I did, yeah. Okay. Per tuition. And then I just worked for, so that I could pay my rent and stuff.
Okay, so last question before we move to the EBITDA implications of this for SoFi. I want to get your kind of ideological take. I don't know if you talked about it when I was gone, but you personally believe that people should pay their fucking loans and stop complaining, correct? Or do you sympathize at all with, we gave PPP loans, we bailed out the airlines, we can't give kids a couple grand to get started in life? Like, where do you stand on that?
He doesn't just want your SoFi opinion; he wants your political
views.
Okay,
you want my political, ideological opinion. I'm gonna get hate.
I mean, it's not political; it's more so.
I'm in the middle. So here's the thing. I think that it's unfair, and we talked about this a little bit. So I'll rehash it really quickly. I think it's really unfair that the politicians, and not the politicians, but actually it was the politicians. The way that this is set up, the federal government will give you as many loans as you want, for as much as you want, basically. And you don't understand, most of these people don't understand as 18 to 22-year-olds what they're getting themselves into. And universities have have been ramping tuition like crazy because it'll be paid for, because these people aren't seeing the bill at the time that they're paying it. They're seeing it later, and they're not making informed decisions. And so I think it's really irresponsible that we give federal student loans at all. Because of that reason. So basically we're putting this at-risk 18 to 22-year-old, technically their brains haven't even fully formed yet, right? That doesn't happen for males until we're 25. That's why we're idiots. But the universities are getting fat and rich. These people are not understanding the loans that they're taking, and then they're strapped with that debt forever. They can't discharge it in bankruptcy. It'll go to your kids if you die. this, like, student loan debt follows you no matter what. And you can't, like, it's awful that we do that to those kids. At the same time, what I think that one of the things that I'm worried about just culturally is that people don't want to take responsibility for their actions, right? They'll do something, and I think personal responsibility and accountability is really, really important. But you also have to let the person know ahead of time what they're going to be accountable for. And so, like, it's kind of this weird middle ground. I actually think that the best thing to do would be to privatize all student loans, because then if a bank is giving this loan out, they're going to say, "What's your major? How much money do you have in the bank? What are you going to do after college? If you're taking this loan, you shouldn't be doing this major because
Okay, now to
we're
push
not going
back
to give
real
it to
quick,
you."
that's a great idea. But if they don't do that, does that leave a lot of marginalized populations with no ability to get private loans? Do you think that would
So
be a
I
side?
think that the answer to that, so there's no answer that's going to solve everything, right? Like, that's impossible. There's always edge cases, and there's always going to be people who are hurt. I think that you should also make community college completely free, because community college tuition actually costs less per student than sending a kid to high school right now, which we already pay from public funds. So make community college tuition free for anybody who wants to go. That way you get these, underprivileged minorities, people who, who otherwise don't have a way to go, they can still receive higher education. But and then privatize student loans so that you don't have these issues that we're seeing where the government will just give out as many loans as possible that people don't know what they're signing up for. Universities, and that this way, like, if you privatize student loans, then universities are going to be incentivized. Like, it's all about the incentives. And if you incentivize universities to actually give an education that's worth the cost of entry, that's what you'd have to do if the money wasn't free and just flowing from the government. And so you're going to incentivize universities to give a better education, to have better ROI, because otherwise kids aren't going to be able to get, like, if you want to go to Harvard and spend 50 grand a year to, go get a degree, you can do that right now. But if a bank is holding that loan and it can be discharged in bankruptcy, and they know that that's going to happen, they're going to come to you and say, "No, dude, we're not giving you that loan." And so then
That's a good
Harvard
idea.
has to say, whatever you do, right? If you, or Harvard has to say, we have to provide $50,000 per year worth of value out of
Yeah.
every single year that our kids go here, the students go here. So, like,
It would
that's what
theoretically
bothers me, is
eliminate
there's no
liberal arts
reform.
degrees.
We never talk about reform. Like, we just talk about student loans and moratorium and whether or not people should get free money.
Yeah, I saw this thing when the conversation around ending the moratorium and ending the forgiveness was at its peak in terms of debate around, a cohort of people who were saying, I'm paying for these other people's student loans for my taxes. And then another cohort were saying, like, okay, let's push it back. They made a parallel to small business loans. And they were saying, well, if I came to you with a small business loan and I said, hey, look, the first 5 years are just going to be me investing in that business. You're not going to see any ROI at all. And then after that period, you're going to see, there's a chance that you might see very small returns. And then maybe after 10 years, you're actually going to, be profitable in that loan. There'd be no bank in America that would ever give you that business loan. So why do we do it for student loans?
And then I guess going back to the PPP loan, so there was lots of fraud, and obviously, like, fraud is bad. Like, that's not a really bad or controversial statement, right? And everybody who defrauded the United States government should go to jail. I don't think that's a hot take either, right? But the thing about PPP loans that I don't necessarily like the argument logically is that PPP loans were given with the idea that they were given with the idea that they would be forgiven as long as you underwrote the terms, right? It's like if I was going to buy a house, right, and my parents said, "Hey, we're going to give you, 10 grand to help you out and to cover your down payment, and as long as, like, you don't do anything stupid, you never have to pay us back," right? Like, as long as you don't do something stupid with that money, then like, just consider it a gift. That's kind of what the PPP loan was, right? Like, from the beginning, they were saying, this is stimulus. We're going to give you this money. As long as you keep your head count at this level and, whatever it is, then that money will be forgiven. That's different than student loans, right? So student loans, you got in and it's like, you're going to be repaying this. Whereas PPP loans, it's like, this is essentially a grant for everybody who takes it. And so like ideologically, that's where I think that argument isn't like structurally sound from that level. Like they were different. Anyway, that's kind of my take on that.
Let me ask you this question. Let's say you go the private loan option with the banks, which I think makes a lot of sense. No bank will give you a private loan for, a gender studies degree, a liberal arts degree. Do you think that would be good for the country if we just don't have kids doing liberal arts anymore, unless you can pay for it, like the most elite kids of society? So everyone would be a STEM degree because that's what banks would invest in, theoretically.
So, I mean, there are people. So if you had if your plan was to go get a PhD and to be a college professor, right, and you had the academics to be able to back that up, you could go get a liberal arts or a political science degree or something else, right, and probably justify it. The other thing is there's lots of people who pay for, not lots of people, there's quite a few people who just pay for their way through college or have, parents who will pay for them or whatever it is. Or like all my kids, I put probably just as much, I probably put more money away every single month in my kids' 529s, which are college accounts, than I do put it into my own investments, right? Because like it's tax sheltered and other things. And so like my kids will probably have their school pay for just because that's going to be, because I'm planning ahead for them. Right. And like that means my kids are privileged. Yes, it absolutely does. And they're going to have advantages over, kids whose parents didn't do that. And and I feel for those people. And that's why so it is hard, right? Because there are the edge cases that make it difficult.
I would go even further than you. I would say if you're trying to get a liberal arts degree, you need to realize you can go on YouTube and learn about all the philosophical stuff you want to learn about. But in terms of advancing a society, unless we see the data that a philosophy degree can actually make a difference in the world, which there is some data on it, I don't want to be hyperbolic around it, then maybe it's just not valuable to society. I mean, we can say that maybe these degrees are not as valuable to creating a more well-rounded society, especially with all the stuff that's going on in terms of the challenges we need to solve.
Yeah,
it seems like you get if they were that valuable, it does seem like you'd get more return from them, right?
Correct.
People would be paid more if they do it.
But the truth is that if there was just a ton of sign up or like lower enrollments for students in certain areas, then the colleges would just lower the cost of education in those areas because they would still want students to come in at any price because they know to actually fund the colleges, you don't need $50,000 per student per year.
So we're basically saying the free market would solve a lot of these issues.
That's the key, right? Is that if you privatize the loans, you make community college free. Now also universities have a free alternative, right? If you can go to community college for free, or you have to pay 30 grand to go get your liberal arts degree from the local state college or the college of your an out-of-state college, now there's real incentive and there's a really big difference between those two things. And so you let the main part is that markets can solve this as long as you let free markets take their course. And so that's that's the underlying reason behind, I guess, what I advocate for, right? Is the fact that you have to solve the incentives problem.
Chris, I'd like to pivot the conversation. I don't know if everyone's ready for that, but I'm over it.
Let's get a quick super chat for you first, and then go ahead. I think this is your channel, Tanner. You can read it.
No.
Tevis? Okay, Tevis, you read it.
Love SoFi Weekly and long SoFi. I actually wanted to ask you guys an off-topic question. I do not understand. How can FRCB stock have a 147% dividend yield if they were bought out by JP Morgan?
I have no idea what stock that is.
I have no idea. Tevis will get back to you.
Is that First Republic? Is that some sort of First Republic thing? Because I remember theirs was FRC.
FRCB, that's it.
Is that some Class B shares or something?
Yeah, that's a Tevis. Make sure you get that guy's name and message him later. Let him know.
It does look like it's.
Yeah, it is First Republic.
Nailed it.
First Republic, and it's probably
TTCF just went bankrupt today, guys. Stock down 40% after hours.
That is wild. I saw
one?
That.
Tattoo Chef.
Wow.
It's one of Jeremy's picks.
It's a vegan frozen foods company. But
all right, EBITDA. We're moving on.
Yeah. Okay. So actually, let's go on to that because I was going to get into a different topic. So I would love to know more about projections.
Okay, we'll go through this quick, and then we can get to other things because we've talked probably too much about student loans. Okay, so I guess if you share what I'm scrolling through a minute. So I did these scenarios kind of a bearish scenario, a baseline scenario, and a bullish one. I share kind of the assumptions behind them here. If you really want to know, you can go through the entire article. But this is the bottom line. Man, this mouse is sensitive. Okay, so this is what I expect. This is just incremental revenue and incremental EBITDA based on the scenario. So you're going to have to go read the article if you want to know all the kind of background to what I'm using to calculate these. And this is for 2024. So in the bear scenario, we get about $140 million of extra revenue that we didn't have this year, and an extra $50 million of EBITDA. And I consider the baseline to actually be pretty conservative. And even if we just hit the baseline stuff, we're talking about an extra, so that alone is 10%, like this is an extra, approximately $100 million per quarter. And right now we're at about 450 million. Yeah, so this would be Q4 of 2024. But like if my scenarios hit, we're talking about like an extra 20% growth for free, right? Because we're at $470 million a quarter right now, like SoFi is, right? And so if you just tack on, this is 20% growth by itself. If everything else, so personal loans stay flat, home loans stays flat, we don't get anything else from Galileo, and we don't get anything else from financial services, you're already baking in 20% growth next year with the baseline scenario. And then we're looking at, so in first quarter of 2023, we lost, what was it, $35 million was our net gap, or our gap net income loss. And we're looking at just making, like, student loans alone would just make that up immediately, and you'd be back gap profitable in the baseline scenario. Now, if you're bullish, so the bullish scenario is just like, it's not even that bullish. It's we get back to our historically, the amount of money that we got historically from student loans. So it's not even saying like this is going to be even more profitable than it was previously. It's just saying this is student loans coming back will have the same amount of profitability as it did before it went away. And with those numbers, you're talking about an extra $1 billion in revenue and $400 million in EBITDA.
It's fair to say that's unlikely, though.
Yeah, I don't think that'll probably happen.
At these rates.
Let's see, at these rates, but it could happen by the end of 2024, right? Like if we get a couple of rate cuts, and it starts to kind of build, both that would increase the NIM, it would increase the gain on sale margin, and you'd probably get more originations because rates are coming down. So it's not an out of this world prediction, but that's why I said it's a bullish scenario, right, rather than kind of a baseline one. But these are big numbers, right? Like that's the thing, is that and even the bearish scenario, like that's a lot of money, right? Like an extra $140 million a year, it's basically an extra 7-8% growth rate for free. Yeah. And those numbers are really bearish.
So is this factoring in new growth or the student loans in general? Because right now we're doing about 500 million in originations. Now it'll go to 2 billion, like a 75, or well, I guess a 4x.
So this is just incremental. It's not saying this is going to be the total from student loans. This would just be the above. So right now we're at $400 to $500 million worth of originations. This is what it would be above and beyond that.
Yeah. Okay. But just projections. Yeah, great. I mean, what are we doing in depreciation and amortization? Is like 40 million a quarter or something like that, right?
Something like that, yeah.
Wipe it away, and then our EBITDA is already above stock-based compensation, and boom, there you go. That's practically your net income. So yeah.
Basically, this is going to be good for shareholders.
I think so.
Do you think we get gap profitable next quarter or Q3, Chris?
Second quarter?
Yeah.
I don't think it happens in second quarter. No.
We're 5 cents away, right?
Yeah, but I don't think we get an extra $40 million.
Amit loves that. Amit loves saying that. Like he's like, it's just 5 cents.
It's just 5 cents.
I just don't think. Yeah, I don't know. Well, I guess like it's in the realm of possibility. It really depends on Galileo. I was really disappointed with Galileo's performance last quarter. If Galileo would have just stayed flat, if we hadn't have lost current, for example, we'd be a lot closer, and it would probably be in the realm of feasibility. But I don't think it happens in second quarter. I do think third quarter is. So, I mean, I said over a year ago that I thought third quarter would probably, and that was before SoFi guided for fourth quarter profitability. I thought that third quarter would probably be it.
Do you think there's any concerns?
Projections, but
do you think there's any concerns with we factored in 2 rate cuts and Jerome's thinking of raising 2 times?
No, I don't think so. So I think the bigger deal, and actually I wrote about this on one of my recent articles, right? But so there were 3 things in our guidance that probably aren't going to come true, right? Number 1 is we guided for those 2 rate cuts. Number 2, we guided for 5% unemployment by the end of this year. And number 3, SoFi guided for 2.5% contraction, GDP contraction. And so rates are definitely not going to come down that much unless like we get a real crash. Unless something bad, like unless the economy breaks in some way, we're not going to get those rate cuts in the back half of 2023, in my opinion. But the most recent Fed projections put unemployment at 4.1% by the end of this year, and put GDP as going up by was it 1%? Tevis, you're nodding. Did you remember what the actual numbers were?
I know that they were all better than SoFi was expecting. Like SoFi had more bearish takes on, like they thought the recession was going to be deeper than what it actually is.
Yeah, and so anyway, the point is that like 2 of those 3 are actually, so if rates don't come down, that is a small headwind, but it's not as big a headwind as a tailwind in unemployment is, because when defaults in personal loans are going to happen when people are unemployed. As long as people are employed, they're going to keep paying their loans for the most part, right? Like generally speaking. And so having the unemployment be lower than we were expecting more than makes up for the fact that those rate cuts aren't coming, in my opinion. I think that that's more of a tailwind. It overcomes the fact, and the fact that GDP isn't contracting, right? That's also bullish for SoFi. So those 2 things that like are better than expected make up for more than the rate cuts.
So you think a higher unemployment rate would have led to more loan delinquencies?
Yeah, absolutely.
Oh, I think he's alone on that statement there, Amit.
You're being sarcastic,
yeah.
right? Okay, yeah.
Of course.
Yeah, okay. I was like, what? How does that not logically make sense?
No, it does make sense. It does.
We're more likely to get a rate hike than a rate cut towards the end of the year. Although I don't think either is going to happen, but
okay.
But yeah, I think generally SoFi, like their guidance is really conservative. The other thing, and we don't have time to go into this right now, their guidance is so sandbag. It makes me really frustrated.
Just like everything else in their numbers.
It's impossible for them to get to fourth quarter to profitability within Q4 2022 with their guidance, with their EBITDA guidance. It's impossible. If they hit the EBITDA guidance, they'll miss profitability by a wide margin. So at least their EBITDA guidance is really, really, really sandbagged.
Yeah.
Anyway, I did the analysis. I need to write it up, and I'll send you the link when it's up.
What do you think about Galileo's potential right now? Like let's pick on Current for a sec. Current left to go to Visa's own solution. Visa just acquired a company that is doing quite like what Technisys is doing, building core and ledger processes for banks and fintechs, mainly just in Brazil, but that's another area where Technisys lies in. FedNow is coming out.
So
tomorrow, yeah.
Tanner, can we let's touch on this topic, but can we pivot from this after to Goldman and Apple? Because I think that's going to be really interesting to talk about.
Okay.
So we want to do Goldman or we want? Yeah, go ahead, Chris. Answer that, and then we'll move on.
Yeah. What do you think about Galileo going forward?
I'm excited for it, but I want to see results, right? Like that's the thing, is that like there's all this stuff that like you can get. I get really excited about the potential, but potential is one thing, whereas results are something else. They've executed on every other line of business that they've had. They have not executed it that well in the tech platform. That makes me honestly a little bit nervous, right? Like that's the one part. That is the biggest bull part of the thesis. Like that's where if they hit Galileo right, all of a sudden this becomes so much more than it is right now, and you get re-rated because you've got, you know, SaaS like margins on that business, and you can do like, you can't grow personal loans 30% year over year for more than 2 or 3 years, right? Like it's just not really feasible. You can do something like banking as a service. You can have a 30% growth rate for a decade. And so like, but the execution so far hasn't been there. And I think it does make sense with the macro, right? Like they were targeting fintechs, and fintechs got hammered last year, and neobanks got crushed, right? Like it was a really bad time for all of their clients, for most of their clients on Galileo. And they pivoted, and they've moved things onto the cloud, and they've tried to be really lean in what they're doing. And I believe in the strategy. To answer your question, I believe in the vision, but I want to see the results now.
Yeah. Yeah. I think it was, you know, obviously we're just collecting what we hear publicly, but I think it was a shock for me to hear during the quarter that they were going after 12 large financial institutions, one of them in proof of concept. And then later on, Chris Lapointe in one of his calls said those 12 institutions are going after any product at Galileo. So some of them are going for pay in 4, buy now, pay later. And that does not get me excited. So, yeah, I mean, Galileo is one of those ones where, like you said, I find I just need to see the results. And right now, I'm just mainly focused on the bank side and the financial services. Now, that would be a really cool pivot. Just before we go to Goldman Sachs, just because I want to stay on SoFi because it's the SoFi Weekly, just real quick. The financial services. Why is it growing so fast if there's stocks like Robinhood out there, for example, that Amit loves so much?
Part of it is actually, so, and thanks to Vadim and Banking IP, they helped me understand this better. So part of it is the revenue that comes in is paid for by the lending segment. So think of it this way, right? So SoFi is giving out 4.3% to their members, and then the financial services is charging, I don't know what the number is.
So true. I
but
got
like, yeah. So SoFi is charging so the financial services arm is charging the lending segment 5% to lend those deposits out, right? And so now financial services gets to look like they're making 5% on deposits, and then they're giving out 4.3%. So a lot of the financial services at revenue growth is because of those higher rates that they're lending their money out in-house to SoFi. And it does make sense because like if they weren't lending it to SoFi, they'd be sticking it at the Fed, right, for 5.25%. Right, you can just do overnight lending, so it does make sense. Like they'd be making that money either way, but then they're paying that money also to customers. And so on the financial services, like the revenue has been growing at like triple digits year over year. A lot of that has to do with rate movements. The more important thing is the contribution margin, and contribution profit. So and that's actually been, so I can't remember when it peaked. It might have been second quarter. I think second quarter of last year, maybe third quarter, is when they had the highest net loss, the biggest contribution loss. And now it's been narrowing, and it was only like $15 million was the discrepancy last quarter.
Yeah.
So that's the key to look at. Like the revenue growth is kind of, I don't want to say it's fake because it is real revenue, but the fact is, like, as they raise rates, like their revenue is going to go up, but also their expenses go up because they pay APY to members. And so that's not that important, right? The margin's the important thing to focus on inside of financial services.
It's similar to businesses like Open Door or Cash App, for example, where your revenue is kind of tied to your cost of goods in a way. So, but yeah, do you think that's also like, because we're getting so many other products in the financial services, like for example, high margin products like our credit cards, and potentially now getting into options or margin is kind of helping with the profitability of financial services over than just the revenue and stuff like this?
Yeah. So the payment processing is going to help, right? Like every single time, many more people are using SoFi as their main bank, which means lots of people are paying with their debit cards, which means we get interchange fees, right?
Yeah.
That's a tailwind. Invest coming out with options, although they need to come out with level 1, which I think is happening next quarter. So sometime in the next 3 months, and then I'll transfer all my investments over. Amit, we can talk about Robinhood another time.
I've done
and
enough
then-
with Tanner.
I know. I watched the video. It was actually excellent, guys. You did a great job. I think the bigger one is credit card, right? So Anthony Noto actually said in the second half of 2023, we're going to step on the gas with credit card. So they've spent 18 months, they've proven it out, they understand it, they know the risk models, and now they're going to, he said in the back half of 2023, that's something that we're going to, and that is probably the highest margin financial services product that we're going to have. You make a lot of money from credit cards if you do them right. And so like that's something that could really take off in the second half and could lead to real like growth, both in terms of revenue and especially in terms of margins.
So I have so many other questions. I'm even wondering, like, do we have a Palantir Weekly tonight?
Yeah, I'll leave the stream on. You guys can talk. I have to leave in 5 minutes, but you can keep going.
Okay.
Let's go to Goldman Sachs and other people can talk.
Yeah, sure.
I feel bad because I feel like I always monopolize.
But that's good. We don't get you often. So when
yeah,
we get
you're
you,
a special guest.
everyone's listening to what you like. You don't understand. In the context of SoFi, I mean, we got to give you some credit. You have 10x your personal brand as a thought leader in this community, right? Your Twitter following is growing like crazy, Substack, all that stuff. People really respect what you have to say. I think the company is going to be well in the next 3-4 years. So when it gets to $20-$30, you're going to have tens of thousands of people caring about what you have to say. So these are the early days, and we're getting it on footage right now. And in 4 years, we're going to look back at you being prophetic about this company. But you could also go to shit, and you could also be a dumbass, right? And so like it'll be fun to see what it turns out. All right, let's shit on Tanner's thesis on Apple taking over the world. This fucking stupid argument he made 2 months. This fucking idiotic argument.
It's not stupid.
Yo, when I got the Wall Street Journal
Doesn't mean I
fucking
agree.
notification,
Go ahead.
I thought of you. I was like, yeah, Tanner, this is dumb. I knew it was dumb.
It's not. You're saying like it's a checkmate. Nothing's happened. Nothing's happened. They're still going to have a business.
If Goldman Sachs doesn't want Apple, who wants Apple? Goldman is the cream of the crop.
No.
Goldman Sachs doesn't want consumer banking because they lost on every single front.
Okay, so who wants it, Tanner? Do you think JP Morgan's going to take it over? Bank of America?
Apparently Amex.
Here's the problem with Apple. The problem with Apple is they screw over all of their partners all the time, and they take all the margins for themselves. Like, and it's not a problem, right? That's why Apple does great business, and that's why Apple is the biggest company in the world. But it's really hard to partner with Apple and make money doing it. But that's great for people.
But the truth is that if a bunch of partners leave, like, here's the thing.
So hold on. Can I just set the stage? Yeah. So, okay, context. News came out today. I think Wall Street Journal was the first to report it. Goldman Sachs is looking to end its partnership with Apple. Ironically, happened in the same day that Apple crossed the $3 trillion market cap. But as you all know, Goldman is the partner in the Apple savings account, the Apple card, the thing that offers you 5% on your money. Goldman is now in talks with American Express to take over its Apple card product. This is what the Wall Street Journal reported. And apparently, Goldman's already lost over $1 billion just last year due to its Apple partnership. Why did they lose money? Well, it's a high percentage, the 5%, and Goldman's the one that's footing the bill for that.
And just to add to Tavis's comment, Goldman Sachs is locked into a contract all the way to 2030. So
for 10
whatever
years,
deal happens, it's going to be in Apple's favor because Goldman Sachs has more to lose staying in the contract.
So, okay, my turn. The fintech side, Apple Card, Apple Pay, Apple Buy Now, Pay Later, their cash solutions are not going away. Who's going to manage that program is up for debate, and they can pass hands past Amex, past whatever. And the truth is that Apple's profitability in this segment does not matter. I'm not saying that Apple, coming into this market means that you should buy Apple stock. There's two different, like, whenever I say that I don't believe in Google, doesn't mean that I believe now in Microsoft or something like this. If there is a player in a space that is willing to lower margins for the entire space, like FedNow, for example, then it hurts the entire industry, and that everyone has to comply, or else lose market share.
Yeah,
So-
war of attrition, basically, is what you're saying.
Exactly. This is the exact thing of Uber and Lyft coming into the space. Taxis have to adapt or die. Okay, and they kind of did both. And by adapting, they also die because their margins die. So Apple being in this space, there will be a program manager for the largest company in the world. I don't care if it's Amex or Visa or Galileo or Marqeta or whomever.
Okay, real quick.
let me just-
Let me
yeah,
let you
go
go.
ahead.
I gotta leave, but I will say your take is still garbage. It was as garbage as it was 3 weeks ago.
Okay.
You have literally not accounted for the fact that Goldman Sachs would leave, and that's because you didn't do your due diligence on how the consumer business already failed with Marcus, and somehow you thought Apple would make it good. Second of all, now let me leave and say my last argument. You will be proven wrong over the next 5 years because Apple will not become a major player in the fintech space. It's just that simple. All right, have a good night. I'll see you guys later. Enjoy the debate.
I bet you already Apple has more deposits than SoFi. Okay. They got $1 billion in deposits in 4 days. Where does this money magically come from? They're in the space already.
There are already like huge amount of Apple Card members. All they have to do is press a button whenever they go.
They already have the ecosystem, dude. So okay, so
Yeah, I'm not arguing how easy or hard it is for them to get in the space. They are in the space. They do more processing volume than PayPal. Okay.
Yeah,
How does no one else see it?
Tanner, I'm not so far in Amit's camp. Like I agree, Apple.
None of us, I think, are that far. But
Yeah.
that was hilarious.
I think Apple has the potential to be a big player. But here's my main question. You know, Chris, I think nailed it. Apple abuses all of the partners that they're a part of because they throw their weight around when it comes to that negotiating.
So what does that mean?
And their ecosystem. What that means, or what my question is if Goldman can't handle it and is losing over $1 billion in their partnership, what makes you think that Amex will be chomping at the bit to take this deal? What makes you think that any other player would be like, yeah, please sign me up to lose a whole bunch of money just so I can have an Apple's logo slapped on my card?
Sure. Okay. So then that's what happens. Amex does not want it. Okay. Then Visa does not want it. And you know what happens to the popular kid Apple whenever no one wants to play with them anymore?
What, they get a banking license?
No, they start to no. They start to share the ball a little bit. Okay. Their margins and how much their take rate is and pushing around, being the only person that gets to make profits in this deal will change. Why is it that like you guys think that they're going to close down the idea of them taking in deposits before they just lower their take rate?
So I guess to add something to the discussion, so I don't think you're wrong. Apple does have the ecosystem, right? Like they have a way where they can get their customer acquisition cost is basically zero, right? Like, and that gives them a competitive advantage over everybody else. They're not a bank. They're never going to be a bank.
Right.
They don't want to be a bank, right?
Yeah.
And the other thing is that I think if they go too heavy on this, they're going to be fighting banks. Because if you start taking market share away from banks, then JP Morgan's going to get pissed. And when JP Morgan gets pissed, then lobbyists go to town, right? They go to work. There's going to be like if you are taking over the buy now, pay later space, there's like Square doesn't have that much lobbying power, right? Like Affirm doesn't have that kind of lobbying power. But if you start taking on banks, as we know, as SoFi shareholders, there are things that happen that are not good. And there's politicians who come after you and other things. So that's kind of the first thing. And that's just speculative, right? Like we don't actually know if there would be people breathing down their necks and if there's going to be legislation that kind of hurts them and makes it difficult. But the second thing is, and this is more, a race to the bottom on margins is a win for the lowest cost provider. And so if Apple's driving down margins across the industry, the person who wins is the vertically integrated with their own tech stack, has a banking license, is digitally native and doesn't have to pay for physical branches, right?
Agreed.
And everybody knows who I'm describing right now, right? And so the point is that like Apple can do whatever it wants. It's still never going to have the take rates of SoFi because it doesn't have those built-in advantages that SoFi does, because they're always going to have to partner with somebody else, and somebody else's tech is not going to be as like they're going to partner with these huge banks, and these huge banks don't have the integrated tech stack that SoFi does. And these huge banks, like you have to be a big player in order to pay to go with Apple, and that comes with a lot of like this legacy baggage. And so I do think like yes, if it drives down margins, that is overall like bad for all banks, but it's less bad for SoFi than it is for everybody else.
Correct. I do think there's two ways of looking at it. That either one, a person that's looking for a digital banking solution will choose Apple over SoFi because they might not hear about SoFi by the time Apple push notifies them for a savings account.
Yeah, and I
There's that
agree.
possibility. The second possibility is the fact that someone that doesn't even know, and I know that on YouTube, on the SoFi Weekly, people do not think that like no one knows that there's not an ability for digital, banking. But the truth is that even the idea of that is still a risky idea for a lot of people, or they might not even know it exists. Apple would bring a lot of brand awareness to the idea that you can store money online safely. Okay. And in that case, then the person that starts to do that will then go, wow, this is amazing. I trust this. What are the other options that are available? And then they find a SoFi, for example. Just opening up the market in general.
I think there's a big problem understanding like why Apple went to make this savings account. It was only to save money on their own operations, because before their savings account, and remember, you can't get an Apple savings account without having their Apple credit card. And to get that Apple credit card in the past, before the savings account, whenever you got your 2% back or your 3% back at wherever you spend your card, that money you should just go to the cash, Apple Cash wallet like feature, and you would be able to transfer that to your bank or send it to your friends. But Apple realized that was really expensive to hold that money in sponsor banks or Goldman Sachs. So they decided to make a savings account feature where it just automatically flows into this account. So over time they can make money off the interest. But I don't think it's like a full set product. I think it's just more of like a back end thing that saves Apple a ton of money and also Goldman Sachs a ton of money, because all the money's pulled to like one little account that Apple can leverage whenever it feels like,
Okay, but I want to make sure that I understand what you're saying, because like I agree with you. It does help them make extra money. They're essentially renting a charter from a larger institution, and so they can give those deposits and everything to that bank. They don't get to use those deposits, but essentially, I don't know how exactly the deal is set up, that whatever they're shoving over to that bank will have to immediately give that money back to Apple, and whatever they got minus a fee to the sponsoring bank. That's essentially what PayPal does. And then if they originate any loans, for example, PayPal can't actually do that. They immediately have to do the bank has to get it. They have to sell the loan and then give the proceeds back to PayPal. So, like, I don't know what the deal exactly is set up, but everyone's looking at this like this is a basic checking account. It is today, but then they get Apple Buy Now, Pay Later. And I'm sure even today, even in its infancy, is probably larger than Affirm. Okay. And that is something that no one is sort of thinking about. Like once they get to, bill pay and peer-to-peer transactions and setting up that Cash App sort of system where you have like a cash tag and you need less and less processes to go somewhere else. People like the Apple ecosystem. And I wonder the effect on the total addressable market that Apple has to put on. Whether it's good or bad, it is something that we need to be paying attention to.
I just don't think that, like, if Apple comes out with Buy Now, Pay Later and they do it well, everybody else is going to follow suit. And
it's out. It's called Apple Pay Later.
Yeah, but it's not available for everybody. Like it's very, very slow. It's like I would argue it's even close to 10% of the people that are allowed to use it.
Okay, but why is it slow? You mean it's slow to roll out, or it's slow to use?
It's not a huge famous product that Apple offers yet. I understand,
but this is their first. This is their first time in a risk product, so they're collecting data. They're seeing how to risk clients. How long did it take for PayPal
that it's going to be massively successful because Apple has a ton of data. I'm just saying, like, whenever this becomes popular and people recognize it, Buy Now, Pay Later is an actual like awesome product, and more people start using it because it's a frictionless loan that's powered by data, not by FICO scores. other people are going to start making their own buy now, pay later products, just like SoFi is offering from Galileo and stuff.
But who can compete?
It's not about. I don't think. I don't know. I don't see. I think there's going to be like smaller and smaller like markets and niche areas where other people would be able to compete with Apple. Apple's not going to be able to calculate absolutely every buy now, pay later transaction and give the best value. There's going to be other places where people are going to be able to.
Yeah, but what do you mean? What do you mean? Get the best value?
Because like you don't offer buy now, pay later for everything. Like Affirm does like specific partnerships with specific companies.
But PayPal and Apple Pay do not. So so what they're doing is that they're doing 0% APY buy now, pay later solutions. That's why they're growing so much faster than Affirm, because they don't have to partner with merchants. They don't have to do anything like that. And then they make all their money back on the amount of transactional based revenue. And then they have small little features within that. Like what they've noticed, PayPal specifically, because I follow that company much closer, is that like 90% of the total people that pay back their buy now, pay later solutions through PayPal do it through a debit card, which they save much more money from processing that rather than a credit card or anything like this. Even though you can pay it back with a credit card, they just noticed that most people pay back their loans on debit. And so it's a much higher margin product, but essentially it's the same product as what they're already doing. It's just you're taking on risk, but then like who processes more payments than Apple right now? I wonder if you guys can name some names.
No idea.
Visa, MasterCard.
Sure.
Good. Yeah. Okay. Yes.
That's probably it, right? Like honestly,
Yeah.
maybe Discover.
I wouldn't even think so. Does Discover do more than $1 trillion in payments? I wouldn't think so.
I don't know. Like I don't know those numbers, so that's not my realm of expertise. I'm just throwing names out there.
Apple Pay is more popular than PayPal. That's crazy. That's crazy. Like,
yeah.
Is it crazy though?
No, but I mean, so and they take a tiny part of the interchange, right? But most of it's going to go to the payment processor, or the Visa or the MasterCard that's being swiped or tapped.
Perfectly fine. Perfectly fine. But that is, regardless of how big an impact that is for Apple, that's a massive impact for PayPal. Right?
Yeah, no, you're right.
And so now all I'm trying to say is like, I'm not saying that Apple benefits a lot from this, but I'm saying the SoFis and all these savings accounts, the Chimes, for example, the Chimes that offer a basic card and checking account. Why would you choose that over an Apple checking with an Apple card? And so I
because
don't think
I've
people
never
are giving
owned
enough
an
credit
Apple
to that.
device in my life.
Sorry?
I said because I've never owned an iPhone in my life. That's why I wouldn't do it personally.
Same.
Also, SoFi still offers more than Apple. And
Is that a Pixel?
Yeah. Yeah, same one.
Apple's never going to be able to offer more than SoFi. Like if they did, just the regulatory pushback from just the Fed would just be huge, right? Like, does anybody disagree with me on that?
I don't think anybody disagrees on that. I think all that Tanner is saying is that in the areas that they do compete with SoFi and anybody else, they're just going to win because they have the ecosystem, and then they can leverage that ecosystem to offer like more benefits to end users. And
I'm also saying that like a lot of people want to just compare on rates. Who cares? And now this is like it's semi-rhetorical, but I kind of want an answer. Okay, who cares about APY? Like who? Because
I mean, people who are financially savvy, right? That's about it.
Right.
And
that makes up for a small percentage of the market.
And there's an even smaller percentage who will hop around to get the very best rate. But right, like when Apple Pay came out and it was at 4.2% and SoFi was at 4.1% or 4.15, like I'm not going to move. Like Lending Club and SoFi are always like this, right? And like I'm not going to move my money for less than a full percent, right? Just because there's too much friction there.
I don't know if this is contrarian or not, but I don't think like it is such a small cohort of the market because all people have been through all these advertisements that banks, fintechs, and everybody in that finance space has made is pandering to their APYs, pandering to their rates. And I just think that, sure, people who are financially savvy, but not so savvy to chase the stock market or maybe more risk averse, let's say, to put it more nicely, to say, okay, I am not investing, but I am saving for the future. And as a result of that, I care about whatever gives me the highest return. Like, I think that's a large cohort of people who are conscious, like, of the rates, but not so much that they would invest. I mean, it's exactly why like credit card churning and all of these, little niches have popped up, is because people care about like the small, changes add up, right? The small improvements. Yeah.
So then let me add to that. What do you think about the idea of Robinhood, for example, offering 4.65%?
And then whenever you actually look,
yeah, but okay, so then you need 10,000. I forget what the number is, but it's like,
sure, but not a lot of people will do that math. They're just going to see a subscription and then just be like, oh, like I'll just go to the other one.
Potentially, but all I'm thinking about is whenever you do look at those alternatives, the member counts on Robinhood was like 60,000 2 quarters ago, 180,000, and then you're seeing 400,000+ at SoFi.
Also, Robinhood is not a savings account. Robinhood is a brokerage account. It doesn't matter if they give you a rate. Like, I think people will make that distinction.
There is no one knows the difference between a cash management account and a checking and savings.
I think
I don't know, man.
I'm talking to a very high-end cohort of people that follow a SoFi weekly channel. You're not following.
Okay. I'm just saying, like, if I were to go pick somebody up off the street, if I were to, let's say, ask my mom, hey, where would you put this money? She'd say, okay, what is Robinhood? Is this a bank? And I'd be like, no, it's not a bank. It's like it's a brokerage. They trade in the stock exchange.
Yeah,
like, okay, I don't want to put it there. I want to put it somewhere safe.
But your friend would say, no, they're not a bank. People would say, yeah, they're a bank.
To Robinhood.
Yeah, because people do not know what a fully chartered bank and a fintech and the difference between those two. You guys not hang out with normal people? There's not a chance that they know the difference between which one can actually hold your deposits and which one has to have a sponsoring bank to hold them.
I don't think any of us
We're fintech nerds.
Give an accurate estimation on what people think about APY, and I don't think.
Then where's the member growth? Why is everyone pouring into the savings? Why does JP Morgan have so many members getting 0.1% with zero?
It's safe. It's safe.
Because JP Morgan doesn't care about individuals. Well, like straight up, they don't care about the consumer at all, because that's not where they make their money at all. Like, yes, JP Morgan couldn't care less about anybody who's worth less than $1 million. And so
I agree with you, but the people that make
JP Morgan.
But the people that make less than $1 million still bank with them.
Because those people are like, okay, so there's two camps, right? There's one that is chasing the highest APY no matter what. And then the second camp is risk aversion no matter what. And the second camp says, okay, I want to put my money. I don't want to lose my money. I'm definitely not putting it in the market. I'm not putting it anywhere risky. What bank can I put it in? Let me just Google what is the biggest banks in America. JP Morgan's number one. Done.
Yeah.
I think that most people. So I think most people fall somewhere in the spectrum, right? Like, there's a huge gray area in between fintech nerds and super risk averse people who only want to have their money with Chase, right? And so I do think that your average person who's making money understands interest enough to say, hey, if I can get free 4%, like, I'm going to do it on my savings account. I think most people do that, right? But most people aren't going to hunt for, well, this one's at 4.3 and the other one's at 4.25. And so I've got my 6 bank accounts and I'm going to move it to whatever one. Like, there are people like that exist, but I think that they're a small cohort. I think the vast majority of people fall somewhere in the middle.
That's the conversation that we're having, is are people going to choose between SoFi or Apple?
Right, but that's where Apple will absolutely win, because if you're already in the Apple ecosystem and they say, hey, put up a savings account, what would make it more difficult is, like, if they don't have, because they don't have a cash account yet, right? Like, you can't get an Apple branded debit card. Right. And so, like, for now, I don't think that's a big deal, but they'll probably get there, right? Like, yeah. And it's true that those people will eventually, like, those people probably would be less likely to use any other bank because they'll get their services through Apple. I agree with that completely.
So I think whenever the conversation that I originally had, Amit instantly brought up the most high-end case for where Apple could be, which was mortgages, right? And then everyone goes, "Oh my God, Tanner's out of his mind." But can you see debit cards coming? Can you see direct deposit coming? Can you see these little apps, these little processes coming? Like, potentially, am I too far out to think that there could be equity trading at Apple? And then like they already have the whole finance and stock apps. Why not have a buy and sell button?
Yeah.
Do you know what I mean?
No,
And
I don't
so-
think you're too far out there, right? I just think that like most
And if people cared about safety at JP Morgan that has $250,000 of FDIC insurance, why don't it's actually your money's actually safer at SoFi or even Robinhood with $2 million of FDIC insurance? So do people
But
really
people
know
don't
what's
know
the bank
that.
and what's not if their money is $2 million covered at FDIC insurance at Robinhood? I don't
mean,
think
most people
know.
don't care, right? Most people don't have $2 million.
Yeah.
So
But-
that's not a big issue for the vast majority of people. So, but no, I think you make a valid point, and it'll be interesting to see where Apple goes from here, and it'll be interesting to see how far banks let them go. And if there is no legislation, if there's no pushback, then Apple could take over a decent portion. And for the your layman user who just wants a debit card, a credit card, and somewhere to put their money that they feel is safe, if Apple provides that, they'll stay with Apple.
Yeah. I think what's really exciting though is whenever you do see these new things that are coming out like FedNow, the first people they're talking about are the NAT banks and stuff like the nationally chartered banks. So I think that that's important that you really do have a strong moat for SoFi versus the Robinhoods, the Cash Apps, the PayPals and everything like this. And that might even go further whenever this was in contention a long time ago, but honestly, it should be brought back into place if more bank runs happen, is that renting a charter is kind of this super gray area that no one talks about anymore. It was a big contentious thing with PayPal, but there's a lot of fintechs now, a lot. And if they find that they are having little oversight in sort of maintaining the health of these fintechs while people are losing their money, they might actually step in, and that gives SoFi an amazing competitive advantage, knowing that we won't have any of those regulatory issues ever.
Is our charter still provisional or is
Conditional? Yes.
it conditional?
Yeah, it is.
When
As
does
long as
that
we get
not
out of
become the
crypto
case?
on time, we should be fine.
Yeah, it'll be years.
Right.
So okay, so like if Apple actually gets there and you can get like a checking and a savings account at Apple, and you can also have a buy and sell button on the stock app on the Apple phone or iPhone, that will be the beginning of like the banks starting, because there's 4,500 banks in the US. And if Apple starts eating huge market share all of a sudden, like the banks are going to start bleeding. And if that's the case, like what do? Do they invest in like a back end that SoFi is trying to build, or
But how is what Apple is doing? How is what Apple is doing any different from Venmo, Cash App, PayPal, all the other fintechs that have come before them that have?
Because Apple owns the hardware, and Apple owns the easiest, most frictionless.
It's the same reason that Microsoft got sued, right? You become a monopoly because you have that ecosystem, right? That's why Microsoft got in so much trouble back in the 90s, which none of you remember. Anyway,
I mean more of the negative effects for large banks. You don't need the hardware for it to be a negative effect.
Like Washington hates big tech. Well, I mean, there's been these tiny little acquisitions that have been struck down because the names who were acquiring were Meta, Google, Apple, everybody else, right? Like, so the big tech, like they will block mergers that make sense. They will block mergers that are good for the consumer, that are good for the company being acquired, and that are good for everybody involved because it's a big tech company. And so like I think that legislation would be the reason that you'd get pushed back. So, and especially if you're going into banking a lot, right? And you're starting to hurt these big banks, and they say, listen, Apple, you've got this ecosystem where you can like you said, you can get this ad if Apple sees that you're downloading a banking app, then they can pop up something in your feed or send you a notification or whatever that says, hey, make more money with us, right? Like those are anti-competitive practices that people could attack Apple with. And so I think like if they get big enough, I think we start seeing those things happen. I don't know if they get big enough. Like this is just speculation, right? Like these are my opinions. I'm no expert in this, but I do think that the fact that Washington hates big tech, and the fact that banks have lots of lobbying power will make this difficult for Apple. Not impossible, and I do think that they'll take a large market share if they come out with these simple products. Because the truth is, the big banks don't care about people swiping their debit cards, right? Like they don't care about individual consumers. They're worried about IPOs. They're worried about big banks. They're worried about investment banking. They're worried about they're worried about the things that make them money, which are not the things that Apple is looking at, and not the things that SoFi is doing.
Chris, I really want to probe you a little bit longer. So in let's say 2030, 2035, whatever, maybe it might take till 2040. Do you think consumer banking completely leaves large banks if they can't sort of compete with APYs and these sorts of things? Because they might already have. So one of the things that I think about is even past branches, which are starting to, shrink and they're getting rid of them. But they do have dividends in the likes of larger fees and expenses that a SoFi or other fintechs might not have. Do you think that banks really resort to the investment side of banking, of the IPOs, of the advisory services, everything like that on aside from just consumer banking and deposits, because that's where I really don't see them competing as the user gets more educated.
So big picture, I think this is more kind of philosophical, right, in nature, this kind of a discussion. Have any of you guys read The Innovator's Dilemma?
No.
By Clayton Christensen. So he's the one who invented the concept.
Probably has. He's read everything.
Yeah, he has.
If he hasn't, he should read this one. It's a good one. Actually, everybody should read it. But he's the one who coined the term disruption, right? So he defined what a disruptive company is, and it's not what most people think it is. So a disruptive company actually comes in at the bottom of the value chain, typically, and they take over niche applications where they make sense for that niche application, and the big players don't care because it's too small of a market for them. And then they come in with a technology that then scales better and has better unit economics and can scale faster. And eventually they get to a point at which their technology, this disruptive technology that the big players didn't care about, ends up being having higher margins and a better product offering for these larger players. So he goes through and he talks about disk drives, and he talks about the steel industry, and he talks about even things like backhoes and the technology that they use, right? Hydraulics versus just physical pulleys and chains and stuff. And so he goes through systematically and describes it over and over and over again. So philosophically, I think SoFi fits that mold of a disruptive technology exactly. And the reason why is because they came in, IP banking always talks about, he's like, student loans is not that profitable. And that's the exact reason that SoFi ends up being a disruptor, is because they took this niche market where there's not many profits to be made. They vertically integrated, they own the full thing from top to bottom, and they said, hey, this is a really great model for making financial products that make us money. And so they took that niche market and they took the knowledge that they gained there, and now they're scaling it into these other verticals. And that's why we've been able to take over personal loans to why when everybody else is pulling back on personal loans, if you look at originations of Upstart and of Lending Club, they peaked and then they came down. SoFi went down a little bit, but it's pretty much flat or growing throughout the entire time that everybody else has been going down, because we have this better product and we know and so I think eventually, so if we're talking 2030, these banks are so embedded in everything that we do, in the entire system, that there's no way that by 2030 there's not going to be JP Morgan, Wells Fargo, etc. But I do think that they don't, so we're taking that they're losing the markets that they don't care about, and if they're not careful, they're going to be disrupted in the things that they do care about.
Well, yeah. So I'm just saying in the consumer side, I know that they're going to be
on the consumer side. I don't see any reason for anybody to be in JP Morgan right now. Honestly, I can't think of a single reason why I would bank with Chase over banking with a neobank, and it doesn't even have to be SoFi.
Yeah. So even as that continues on, sorry, I'll bring my mic up. Even as that continues on, okay, and Chase realizes that this is a market that potentially they're losing, which they are. If you were to look at their consumer banking customer accounts, they're going down. Okay, their deposits are leaving. in that case and they want to fight, how do they even fight back? Like that's what I'm thinking about, because they can't compete with rates because their expenses are too high. So
they don't really need to compete with rates though, because like who's moving accounts for the APY? Like if I just think of
but
just
their deposits are going down every quarter, so people are leaving slowly.
okay,
So
Yeah, but they don't care, right? That's the thing.
yeah,
and I really
JP
do think
Morgan
the future is
doesn't
in
give a
all
crap.
fintech.
to me, before I moved to SoFi, if somebody at like an event came out to me and said, "Hey, man, have you ever heard of this new bank? They have 4% APY," I really wouldn't have cared, or I wouldn't. That doesn't get me wanting to leave. I don't think APY is what is going to make SoFi like a big popular bank. It's going to have to be some bigger value proposition.
I also think there is something to be said about the switching costs in terms of how tedious that process is to switch. I'm not saying it's difficult by any means, but it takes a lot of time to transfer all your stuff over. There's disruption in your service. I mean, if let's say you had this, let's just say imaginary world, you had this unified system where you're on Chase one day and you can press one button, like you can press the SoFi logo, and then literally the next day everything is on the SoFi interface, then all of those barriers and friction points would be removed, and then you'd actually see, who the true winners are. But the banks, to Chris's point, like they don't care. And why don't they care? Because there's always going to be a cohort that is going to be too lazy, or they're going to be they've banked with Chase for 20 years. They're going to bank with Chase for 20 more years to come, and so they're relying on that, right? And so it's a slow bleed, but it's not like any steep drop.
I really think the biggest like friction point in consumer banking, like, is money management and just managing your money. And I don't think any banking app in America right now has like actually budgeting software baked in. And if SoFi can do that in a meaningful way that like provides insights where it like really like makes your ability to manage your money in a good way. I think that's a value proposition that other banks couldn't match, and that could like spur on a lot of adoption. But I don't think APY is going to be, because we're always going to have competitors with APY, right? Like Apple.
Yeah, I just think people to make the jump, I don't think that they need an entirely new service. They just need all the services that they have at the bank with a potential for better. And I think where it's so funny at the banks that they're charging fees, they're slow, and then we have no fees, APY, all these things. It's the same service. Now there are some missing features, right? But it's the same service over there. You're bringing it digitally. That should be enough to transfer people, even without all the the bells and whistles of SoFi Insights or whatever. So, like, I just also think that high-speed internet is not everywhere right now. Okay, cell phones are not everywhere. There is still a large amount of innovation that's coming that are going to be pushing people more digitally. There's less cash. FedNow is coming. You'll be able to do account-to-account transfers from JP Morgan to your SoFi account instantaneously. No more trade plus two. Okay. I literally deal in client transfers every single day. You would not believe that the majority of the complaints that we get is because of that plus two. Like high majority. It's just that 2 extra days, right? Because the thing is that it doesn't necessarily have to come in 2 days. It's in the 2 days. So what really happens a lot of the time is you'll set up like a client pack, like a pre-authorized checking, like a consistent bill pay. Okay. And then you'll set something along the lines for a Friday. They get paid on Thursday. They want money out on Friday because that's the second they get paid, whatever. Okay. Then what you realize is that, okay, you set it up for Friday. They actually get their money taken out Tuesday. Okay. But then there was a holiday on Monday. So now they're getting it taken out on Wednesday. Okay. So then we move it back to Wednesday. So it gets taken out on Friday. Oh, it actually came out on Thursday before they got paid. And now they're getting a NFC, non-sufficient funds. Right.
And then they get charged a fee, and then they're mad at you.
Yeah.
Exactly. So this is such a massive barrier that is so not talked about, and this is just for regular consumer banking. The main people that deal in just wanting to transfer their money, pay their friends, what's the thinking of the R word, sending money globally.
Like wiring money, or
Yeah, but there's a word for it.
I don't know.
Sending money back to your country and to you. Someone in the chat help me. Anyway, regardless,
Sending money back to your country. Continue.
Yeah. So
Remittance.
Yeah, remittance. Thank you. Yeah, these are a lot. Remitly, someone just, which is a large company in there. Are you talking about Remitly? Okay, so yeah, I don't know. These are a lot of the problems that I think that are getting addressed quite soon, and they're big factors for SoFi. And although it's small for JP Morgan to even worry about. That is huge for SoFi. You're talking about it as a percentage gain. SoFi money is a big factor for SoFi. SoFi Invest is a big factor. It's growing exponentially right now. And there's a massive market here. And I don't think there's many other players that have what we have in terms of a fully chartered bank, fully vertically integrated, and has all these tailwinds of collecting these customers from what seems like an endless mountain of clients that need to be fully made aware of what the options are out there and how much better they are. And just sitting on this investment for me, just knowing that this is the wave that investors are going, because I'm young, I'm 25, and I know what is like what the available options out there and how good they are. So I don't know. I don't know.
And I guess
go ahead.
You're right that it is a bigger, and then the thing is, then you open up small and medium business accounts, and then people move those over, right, and that sort of thing. And so and most people with business accounts don't get APY in their account, right, and they have to deal with all this friction, like you talked about in your podcast with Amit, right? Like he got charged by Bank of America because he didn't spend enough on his business account, right? SoFi's not going to do that sort of crap. And so they're going to end up getting, like, if you provide a better product, then people come, right? And Apple, for example, probably isn't going to get small and medium business accounts anytime soon.
Correct.
Like
I
that's
agree.
not something that they're going to, because you really need a charter to do something like that, to be able to expand it. And then, but so if Amit now has, like, Amit then wouldn't use Apple Pay, right? If he's an entrepreneur and he's on the SoFi ecosystem and he has all his stuff there. And so there is, and that's, again, kind of on that topic of disruption, right? That's how you move up that value chain. Small and medium business accounts are way more profitable than you and I, like me and Riley's SoFi account, right? Because you've got way more interchange. There's bigger dollar amounts that are being spent. There's bigger deposit amounts that are being kept on the ecosystem. And so you start moving up the value chain into these higher and higher margin and higher revenue businesses. And like you said, you're 25, right? I'm 38, but I've still got lots of time before I'm going to be retiring. And so like I can sit on this investment and make sure, and as long as they're following that path, eventually they will become, they already are a much better solution for 90% of people who are banking, probably more than that, 95% plus, right? And they're probably a better solution for most of the people who are using Apple's products as well, but they don't know it and they might not come, and that's okay, right? There's a big enough pie here where it doesn't matter if Apple eats up a decent part of it, because the part that we're most concerned about isn't, like, we're looking at high earners not well served, and those high earners not well served are the people who are going to want to do things like invest. They're going to want to have budgeting software. They're going to want to do small and medium businesses, like they're entrepreneurial, that sort of thing. And so, like, generally speaking, right, like not everybody's like that. I work a 9 to 5. I'm here. I'm not starting my own company, but like those are the type of people that there's enough people out there that need to switch, and that SoFi makes a huge value add for them.
Especially in this time in SoFi's life cycle as a business, like with 5 million members and with the US being over 300 million people, like Apple coming in does not take market share. Like the market hasn't even been fully carved out yet in the context of SoFi. Like Apple coming in when SoFi is this much in its infancy validates SoFi. If SoFi had 100 million, members, let's say, then it would be a completely different story. But if SoFi has 5 million members, then the biggest company in the world coming into your space, that's like the best form of flattery.
Plus, SoFi Mexico and SoFi Brazil will come in the future, and then Apple won't be able to play in those markets either.
Yeah, just to clarify, I don't think that Apple is going to eat SoFi's lunch. I just think that Airbnb, for example, would be a different story if there was a bunch of up-and-coming players rather than just one. So I would prefer there be less competition and for them to own this entire space.
Yeah,
and
that makes sense.
You know what I mean? So it's more the future growth impact rather than the current customers that I'm worried about. But why don't we wrap it there? It's been an hour and 40 minutes. I had a ton of fun with you coming on, Chris. Thank you, Riley. Thank you, Tevis. Thanks to Amit. But that's been the SoFi Weekly. And Chris, let us know whenever you have your next nightly shift, because then you can come on the SoFi Weekly again.
Also, talk about your Substack. Where can people read about you?
Yeah, so I try to publish at least something weekly. It doesn't always happen. The last couple of weeks, I've been able to get out at least 2 things weekly. So it's Data D Investing, so the same as my Twitter handle, but just datadinvesting.com is where my Substack is.
Perfect.
Thanks, Chris. I really appreciate it.
Thanks, Chris.
Okay, thanks for having me, guys.
See ya.
Bye for now.